Hey there, today we are going to talk about 3 easy tips to improve your credit score. So first, I wanted to introduce myself. If we haven't met, my name is Carrie Esho, and my purpose in life is to help people with their personal finances. And I've been in the personal finance industry for 20 years, 14 of which I was a licensed insurance agent, still am, and then 6 of those as a financial advisor, investment advisor. So about a year ago, I started my own company so that I can make videos like this and help people in their day-to-day finances and to be more of a practical help to people. So I talked to you and I promised you that we were going to talk about 3 easy ways to build your credit. So and I have to tell you, I must say, I have figured out the comments. So please comment, request, give me thumbs up or like wow faces as we go, and we'll make it more interactive this week. So I'm excited about that. Right. Okay. So these tips are going to help anybody, regardless of where your credit is currently at. So you have bad credit, no credit, or even good credit, these tips are going to help you. So, you know, the conundrum is that you don't have credit, but you need credit. No one's going to give it to you because you don't have any. So it's like you need it to build it, but you can't build it unless you have it. So I wanted to tell you like my own personal story as far as how I improved my credit. And these are actually tips that I used to improve my credit. But I had judgments, liens, collections, being uber transparent. Those were all things that were on my credit report. And at one point in time, I did, it's getting ahead of myself a little, but at one point in time, I did find an error on there, and I'll tell you about that in just a second. And then I wanted to also let you know that I've been in the bank database that if you overdraw your account too many times, they will put you in a little, it's called check systems, and so there's a little database that they use to communicate to each other when there's someone that, you know, this type of behavior might carry over to your bank. You might want to heads up on that. So anyways, I'm not there anymore. Thank the Lord. So, okay. So anyway, so the first tip that I have for you is to get a secured Visa. So most banks offer something like this where you can go in and they all have their minimum requirements, but you can go in there and you can see what their requirements are. So let's say, I don't know any like specific things, but let's say your local credit union is a $500 that they require you to put down. Maybe it's $250, maybe it's $300, but you get the point. What you do is it's called secured because that means that it's backed by actual assets, or in this case, cash, savings account, what have you. So they're more willing to do that because there's no underwriting involved. They have your money and you can't go over your limit. And so that's a really good way of building credit if you don't have it, or if you do have it. And, you know, because you could be just right beneath, you could be at 719, and at 720, you could save 1/4 of a percentage point on your loan. And if you were to do this, because they report on this every month the same way they report on if you have just a standard Visa card. So, you know, if you're at 719 or you're at 549 and you're going to have to go subprime on a mortgage instead of a traditional mortgage. So this tip right here could be something that would give you that extra point to boost you into that next bracket of, you know, credit worthiness, if you will. So anyhow, if you were going to do that, I mean, it would work if you're in the mid 6s and you're still going to be in the mid 6s, or, you know, it just will, wherever you're at, it's going to help you because, like I said, they will report on it the same way that they would on a standard credit card. So that reason that works so well, immediately, I did this myself when I was rebuilding my credit. It worked the next 30-day cycle. Immediately I saw a 30-point jump in my credit score. No jokes about it. That was tremendous, because all I had to do was go to the bank and say, I have $500 in my savings, will you wrap it up into a secured Visa? And they were like, sure. That gives you an opportunity to prove that you're going to make your payments on time, and a lot of banks will transition you into just the traditional credit card. So that then builds your credit, because instantly the utilization ratio is going to be 0% because you haven't charged anything yet. So it's automatically going to give you a bump, because the utilization right there is 30% of your credit score. So if you instantly have 30% of your credit score, and you instantly have something that comes in at a 0 utilization ratio, that's going to make an immediate impact on your credit score. And the reason why that's important is the better your credit score is, the lower the interest rates are that you can get. And in particular, I'm thinking of, a mortgage and a car loan, but in particular, I'm thinking of credit card debt, where you could be at 22% and $38 for an over limit fee. Well, if you have a better credit score, maybe this does bump you up into the next tier of creditworthiness. If you have a good score, this is going to qualify you for lower interest rates, because you're less of a risk. You're deemed less of a risk. And then also, if you make your payments on time, you have to do that. But if you do make your payments on time, then you're golden. You get a lower interest rate, and that enables you maybe via a balance transfer, or maybe just getting a lower a lower interest rate on a card. That'll help you get out of debt faster, because you can transfer those other balances that are on higher interest cards onto a lower interest card, reducing your minimum payments, and then what you're already used to doing, you can accelerate the process that way. So that's my favorite. It worked tremendously for me. That's my favorite thing to recommend, because it works so well. So let me see here. I wanted to stop and answer any questions, because I have this newfound, just look, I'm gonna give a comment. Hi. Okay, yay. I know, what happened was, quite honestly, I got sick of hearing myself say, I can't figure it out, maybe next week. So I went and I figured it out, and voila, here we are today. Okay, so the next easy way, these are easy ways that you can do to improve your credit score, is to check your credit report. So every year on annualcreditreport.com, you can go, it's free. You can go, some places have it and they charge you for monitoring or whatever, but that is the FTC approved website where you can go to it and you can get free credit reports for any of your 3 credit reporting agencies. So I highly recommend doing that once a year, which is how often you can do it. You can also do it if you've been denied credit. You can do it again. It doesn't count as one of your free times. So there's that. And then if you do that, you pull your credit report. Like I said earlier, 1 in 5 credit reports, 20% of all credit reports will have an error. That is, I mean, just look around you. I have a family of 4, sometimes 5. That 1 in the 5 of us is going to have something incorrect on our credit report. So by pulling the credit report, you can review it. Now, they're not always things that do affect your score, but they are inaccurate things that need to be rectified. So you can look at that, and like in my case, I actually found a collection that had been taken care of that was on my credit report. Now, things will stay on for 7 years. But this was something where the agreement was it wouldn't go on the credit report, type of thing. So So that was something that I found that when I pulled it off, again, it made a tremendous difference because it's going to show in your payment history, which is 35% of your credit report. So you have those inaccuracies that if you can tackle them, and then what you do if you find the inaccuracy is you write whichever credit reporting agency you found it on. So let's say you find it on TransUnion, you would write TransUnion. Some of them have it on the actual website you can go to and file a dispute, but you can always write in, and within 60 days, I believe, they have to confirm that debt with the creditor. And if the creditor cannot prove it in that period of time, then, because the onus is on the creditor to prove that that was the case. So if they are unable to prove it, then they have to remove it. If you can't prove it, you must remove it. So, and that has happened to me before, where it's in a different situation where I just wrote and contested it and they weren't able to prove it. And so that was removed. So that is something that will work for you. You can get it free once a year and be monitoring it. It's a good idea to do anyways, really, just to make sure that things are being reported properly and no one is opening accounts that you don't know about. So I do harp on that a lot, but I love it because it has helped me see things that were inaccurate, and it's almost like it's like an unjust feeling, like I've been wronged, and then it's something that you have the power to make right, and you don't always have the power when you're in debt. The servant is lender to the borrower. The borrower is servant to the lender. So you don't have the power oftentimes to do anything about your debt, but in this instance, you do. Okay, so I am gonna. Hey. Okay, so anyhow, if you have questions, go ahead and chime in. So if you're just joining and you're just joining in, I'm talking about 3 easy ways, 3 things that you can do to easily rebuild your credit and improve your credit score. So the first one being to get a secured credit card, and the second one being to check your credit report for inaccuracies. 1 in 5 people find an inaccuracy on their credit report. It's kind of like voting, if I may. Everyone can do it. Not everyone does. Many are called, few are chosen. Okay, everyone can do it, but only the people who do are really really having the effect on their own credit score. Okay, so number 3. So this is something where I could envision maybe a single income household where perhaps one of the spouses wants to go out and start a business, but they're not the one who have had all of the income all along. Well, they're going to find themselves in a situation where it's almost as though they don't have any credit. So even though their name might not be on the mortgage, but they're they're an integral part of the family. So anyhow, so what this tip is to hitch a ride on someone else. So what I mean by that is if you are married in a partnership where you share finances, what you can do is you can take the person who has the better credit of the two, and you can actually add them as an authorized user on your account. So they will send that person their own credit card, but you still have no control. You can't make decisions. You can't request a line of credit increase. You can't close the card if you want. So that is caution that I would give to you is that you are not in control. If you're going to hitch a ride, you're not driving. So in that instance, you know, I would actually give you a caution there. But it also can, if you're with someone who has good credit, it will improve your credit. So for example, let's say that person has $1,000 credit card with a 0 balance. And then they have another $1,000 credit card with a $300 balance. So if you have them add you to the credit card with a 0 balance, you will have a situation where, again, like with the secured Visa, there's a 0% utilization ratio, and that will count towards your credit. In the like manner, if that is a 90% utilization ratio where there's a $1,000 line of credit and a $900 balance, that's going to be a 90% utilization ratio, which just means how much of the line of credit you have versus how much you're paying. How much your balance is. And so if you were to get on that card, it would actually hurt your credit score because of that 30% that goes toward the utilization ratio. So choose wisely. You know, it's a similar concept to having a cosigner on a car, but instead of you being the one wanting the credit and having to go get someone else, well, yeah, that actually is the same. But anyway, so it's similar concept where, you know, you need the credit and you go and get someone who has the credit worthiness, and you have them add you as an authorized user on the account. The credit card company will do that, and then they'll send you the card that you can use just as though it was a joint account, but the main difference being that you can't make any of the decisions. So you have that, and you can hitch the ride. And like I say, this would be something where it would be ideal if you're, regardless of whether you have had credit and don't have it any longer, because, you know, those 7 years. So if 7 years ago I wasn't married and I had good credit, and then over the next 7 years that good credit falls off, you know, those good reports, those perfect payment histories will fall off after 7 years, just like the bad ones will fall off after 7 years. So when you have a situation like that, well, you may be a really, you know, a low risk person, but no one can see that because those items are not on your report anymore. So you may have had good credit history in the past, but what have you done for me lately? That's what they're going to want to know is, do you have good credit now? So if you find yourself where the things have fallen off and you don't really even have a credit card because everything's paid off, you're going to find yourself in a situation where, like I said, it's a conundrum where it's, you need it to build it and you can't build it unless you have it. So by doing this, it's a way that you can get on even if you have had it before and you don't have it, or maybe this is your first time trying to build it, or maybe you've had it and, you know, life has happened and your credit has fallen under maybe an optimal level. Then this is another thing that you could do, just like the secured Visa was something, and then also checking your credit report. So like I said, the caution is that, the caution being that you're not in control of their card, but you get to come along for the ride where that'll count and help your credit. Okay, so with a better credit score, you get better interest rates. So by doing these tips, then you can get a better interest rate, and then you can get out of debt faster, which is what I'm all about, right? Now, another thing, I promised a bonus tip at the end, so I will give it to you now. Oftentimes people who are going to buy houses will find themselves in a situation where their credit just isn't quite good enough, and in that instance you can then go and say, you know, let's try to rebuild our credit. But sometimes an example of something that you could do to rebuild your credit and to get a better credit score is you could ask someone that you have good payment history with, would you increase my credit line? So let's say you have 1,000 and you go to them and you say, would you increase my credit line to 1,500? Well, then that's going to have a higher utilization, or it'll reduce your utilization ratio because you'll have a higher line of credit. If you are shopping for a home, do not do this, please, because it will affect your credit adversely. It will show on your report if you get a car, apply for credit cards. Those types of new credit transactions will actually hurt, because 10% of your pie chart, 10% of your credit score is that new credit. So just in case you're curious, 10% is new credit, meaning how recently have you applied for credit. 10% of it is the length of credit and how long you've had your credit for. And then 15%, the different kinds of credit is 10%. And then, meaning, do you have a mortgage and a car loan and a revolving credit, or is it just you have a car loan and that's it, or a credit card and that's it? And then, like I said, 15% of that is for the length of credit, how long your accounts have been open, and then 30% utilization and 35% credit payment history. So that's what those are for. And just a quick story about the length of credit. When I was 16 years old, I worked for Taco Bell, and for whatever reason, at the time, it was called the Bon Marché, our local Three Rivers Mall, getting nostalgic for some of you out there, but had a Bon Marché. And I walked in 16 years old, I had a job, and I was like, I'd like to save 10% by opening an account today. And the lady was like, well, I don't know if it'll work, but we'll try it. And can you believe it? They gave me an account. So anyways, I had that account for 20 years. And then we moved here, and we had lived here for 6 years or so. And we don't have a Macy's in town, because the Bon became Macy's. We don't have a Macy's in town. The closest one is 90 miles away. So in a way that was good for me, but since I never went to Macy's, I never used my card. I'm not a real big go online shopper. I'm not real big on online shopping. But so anyways, I was never there. I never used my card. They closed my card. The address they had on file was my Utah address, and I never got any of those notices that they were going to close my account due to inactivity. They closed my account, and when I realized what had happened, and I said, well, open it back up, they said, it's gone. It's been, sent to the vault or whatever they do with them. So those 20 years of length of payment, length of history, length of credit disappeared like that. And so that's when I found myself, okay, I have to rebuild credit. So just like bad things can fall off, good things can fall off. So that is your bonus tip. If you are shopping for a house, don't go out and buy a car while you're doing it. That will spoil the fun. So, all right, now I wanted to take a moment, let's see here, and say, this is my I'm excited about the comments, but I'm also excited because I now realize we are in Central Daylight Time. Last week or the week before, I found out from a gentleman had sent me something on LinkedIn, can we do it Central Standard Time? And he was incorrect, but I forgive him, and I love him anyways, okay? I forgive him. You're released. Go in wrong time zone no more. So it's Central Daylight Time. But then the funny thing is, we're about to fall back, and then it's going to change, and it really will be Central Standard Time. But I was very excited to share with you that I'm now straight on what time zone, whether or not we're saving or not. So anyways, I wanted to thank you for coming. Check out, if this has helped you, please do me a favor and like it or share it, or angry face at it. just make people wonder, what did she say that made them angry? No. And then I have my website, carrieso.com, and amoneymanager.com is my business website. So it's KARIESO.com, and then amoneymanager.com is my daily money management business. So I really appreciate you guys joining and tuning in. And every week, Thursday at 1 Central Daylight Time, I will be here doing my live broadcast. So thank you very much for watching, and we'll see you next week. Bye-bye.